Good morning and welcome to ForexTV.com's AM Forex New York. Today is Wednesday, December 5th. I'm Caitlin Sisney. The dollar snapped 2 days of losses against the euro and yen as policymakers in the U.S. and Europe stepped up efforts to stem the spread of subprime loan losses. The yen fell against high-yielding currencies as investors sought higher returning assets funded by so-called carry trades. Yen is trading at 110.2. Meanwhile, euro is trading at 147.12. The pound fell to a six-week low against the dollar as a report showing house prices slumped last month added to evidence that UK economy is slowing, fueling speculation the central bank may have to cut interest rates. Sterling is trading at 203.81. Today we're joined by Securities Osborne from TD Securities. Sean, what is your short-term outlook for the Forex market?
The pound sterling is one of the more significant underperformers in the overnight session, and I think we are probably going to see more downside pressure on the pound over the next little while here. We've had some data out from the UK today showing significant fall in house prices in November, down 1.1%, a big fall in consumer confidence, largest 1 month fall in 3 years there, and signs of further deceleration in the important service sector economy in the UK. In November. This all comes ahead of the Bank of England policy meeting conclusion tomorrow morning. The bank started this meeting today, and there's a very strong chance now that this meeting will conclude with a 25 basis point rate decrease, and that will probably be the first in a series of rate decreases moving into the new year for the UK. So the pound has dropped quite sharply, almost 1 percentage point against the US dollar overnight. It's underperforming generally against the major currencies here, and I think we probably will see a bit more downside over the next few days. We've broken a couple of important support points on sterling US overnight. That hasn't met with any immediate further follow-through on the downside, but it does suggest that technically anyway the market is looking quite weak here. So I wouldn't rule out over the next few days a drop in pound sterling towards the 200 point from current levels closer to 204. We may even see slightly lower levels than that. Elsewhere in the markets today, we have some pretty important data out of the US, ADP, private sector employment data, along with the ISM service sector numbers. They're going to be important pointers ahead of the payroll numbers Friday. And there is increasing speculation, of course, that we are going to get a further rate cut from the Fed, possibly an aggressive rate cut. If we see these numbers on the employment front weaken by more than is expected over the next few days, I think we probably will see speculation of a quite sharp Fed rate cut increase over the next few days here. So although the pound sterling is looking pretty soft against the US dollar this morning, the dollar itself is still, I think, likely to trade defensively against some of the other currencies, some of the other major currencies rather, over the course of the next few days.
Thank you, Sean. That was Securities Osborne from TD Securities. I'm Caitlin Sisney. Join us again later for another update right here on ForexTV.com.